Hello, welcome to the Bitcoin Standard podcast. Our guest today is, for the third time, Jack Mallers, the CEO of Strike and now the CEO of another company, 21. While most of you are sitting in your mom's basements doing nothing, Jack is now CEO of two companies, and the second company is out there to buy as much Bitcoin as it possibly can, aiming to buy more Bitcoin than Michael Saylor. Now, talk about a tall order. Always fun to have you here, Jack. How you doing?
You are the best, my friend. I am fantastic. Good to see you. How are you?
I'm very good, very good. Happy to see you and happy to hear about all your great news as always.
It's fun, man. You know, I listen to your podcast. I've been listening to it for years. And so hearing the intro directed at me as opposed to when I'm walking to the grocery store, having it in my ears, it's an honor. So yeah, what a fun time. I think we just hit all-time highs, at least in US dollar terms for Bitcoin as well. So happy all-time high. What a time to be alive and stacking sats.
Indeed, happy all-time high. It's although I don't think we did hit all-time high. I think we came close, but not quite. No,
Really? We're 109 something. Who knows? Well, happy dollar debasement.
yeah. This train only goes one way.
Yeah.
So how you been?
I'm good. Obviously a little busy, but I'm good. I think we're living through one of the most fascinating times in this fiat money story. To me, it feels like the unwind from this fiat regime and what was set up and continued through this World War era. I think it's unwinding fascinatingly, and it's a great time to be working on Bitcoin. Both there's money to be made, there's opportunity in starting businesses, but I also feel like I'm contributing to the world and playing my small role in restoring, prosperity to our species and hopefully contributing to a new era of human flourishing. So I feel great. Sun's coming out in Chicago. I'm eating a lot of ribeyes.
That's great. Chicago ribeyes, man. I've got such fun memories of them. Some of the best in the world.
Midwest.
Yep, absolutely. It's the capital of ribeyes.
100%. Yeah, it's one of the rare things we're good at is agriculture, commodities, and meat.
Yeah, although I guess I may have just annoyed a lot of my Texan fan base. No offense, Texans, but your steaks are great too. All of American steaks are great. I mean, honestly, it might be when people talk about divine providence for Americans, I think practically speaking, that's just the steak. Really, that's the divine providence. Americans have the best steak. That's how God blessed you.
Well, what's interesting is, not that this is a political podcast, whether you think Trump is great or not, I don't really give a shit. The reality is what he's trying to do is what America has to do, which is getting back to proof of work and producing its own materials and being part of trade without printed pieces of paper and with real goods and services. And America is actually rich with resources. We actually have plenty of food. We actually have plenty of energy, plenty of oil. We just have never thought to have to put in the proof of work to produce it ourselves over the last 100 years. So I'm excited. I agree with you. I think America has great food, great access to energy, great mines, a great population that is willing to work hard given it has to. And so I think folks like Chicago, hopefully we can export some of our steaks to the rest of the world one day and be part of real global trade as opposed to printing pieces of paper and exporting those.
Well, I mean, America exports a lot of steak. I think that's one of the main exports that China gets from the U.S. American steaks.
I think so too.
Yeah, it's some of the best in the world. I've had a lot of great steaks all over the world, but I think America is just the best because the consistency, and I think they bred them for a very long time for a great taste that they come out really, really well. It's
100%.
It's huge. But anyways, let's get back to Bitcoin. So what is new in Strike? You guys are doing Bitcoin-backed loans, huh?
Yes. We've launched a Bitcoin collateralized lending service, which, I wanted to be clear. For some, this is redundant, but, on Twitter, I need to make sure everyone at the margins understands there's no yield with this product. I mean, it has such a awful history full of scammers. There's no yield for depositors. Depositors just get a very beautiful Bitcoin wallet that's fully reserved. And it's a 50% LTV collateralized loan. So it's over collateralized. So you get to draw half of your Bitcoin wealth out in cash. And we offer a 12-month term. And there's two style of loans. You can make monthly interest payments for the cheapest version of the product, or we offer a version of the product called payment at maturity. Now, this is what I think is the best version of the product and the genius way to use your Bitcoin wealth is that you don't owe us any money until the end of the loan. You pay the APR plus the principal back after the 12 months. So you don't actually need to pay us on a monthly basis. That's our most popular version of the product. And it allows Bitcoiners to access their Bitcoin wealth without having to sell it and incur a capital gains event. And I think it's a huge deal. I mean, we are already offering Strike in over 100 countries. So no financial service that I know of can offer a loan credibly to billions of people in the world without credit checks on a mobile device. I mean, if someone in Ghana needed to get a loan from me without Bitcoin, I'd have to assess a picture of their Ghanaian property or something like that. It would be impossible. So I think it's a huge deal. The fact that you can draw capital against an asset that's compounding annual growth rate is around 50% is a way to make the money printers work for you, be on the positive side of this debt-based monetary system. But I'll pause there. And obviously at Strike, we want to do it the right way. It is no rehypothecation. We'll launch a proof of reserves iteration of this product coming shortly, and everything that whatever BlockFi and Celsius and Sam Bankman-Fried we're the opposite. And we want to provide Bitcoiners a trustworthy way to access this wealth without parting with the sats.
Nice. And also your financials are out last a few weeks ago, right?
Yeah, we published some of them for a few reasons. One, I mean, we've just gotten big and we've achieved some pretty big milestones that I don't think the world has totally appreciated who we serve and why we serve who we serve. Also, becoming the CEO of 21, an entirely separate company that I co-founded, I wanted the world to know, and especially our customers, that Strike is doing phenomenally well, and that starting another company had nothing to do with Strike and me shifting my focus, that I run two big successful companies. That's possible. I don't know who made the rule that you can only start one company. I'm defying that law. People are so shocked for some weird reason. You can just do things. And so I wanted to let the world know, let our customers know we're doing great. Extremely profitable, high margin business. We're actually going to announce our Bitcoin treasury within the next week. We're a top 20 holder as far as corporations, Bitcoin treasury. We own thousands of Bitcoin at Strike, and it's a great business. And I wanted to make sure people have confidence in us, and we give that level of transparency as well.
Yeah, let me just run through some of the numbers because it's pretty mind-boggling, because people I don't think they quite realize how big Strike is, because it's at this point, you generated $6 billion in volume, which is more than 600% year-over-year growth. Your gross profit margins are 85% with $0 spent on customer acquisitions. You're expecting 8 to 9 figures in net profit in 2025 with a team of just 75 full-time employees approximately. And you hold the majority of your balance sheet in Bitcoin. Pretty impressive stuff.
Yeah, so we'll make an official announcement, but Strike owns, I actually don't know at this very second because we buy every day, but call it around 1,500 Bitcoin. So our balance sheet has approaching, hundreds of millions of dollars on it. That far exceeds the venture capital money we've raised. And for 75 people, that's not too bad. Extremely profitable business. So as we announced, we'll make anywhere between tens of millions to over $100 million of cash flow this year from our operating company. It's a really interesting business in that the products we sell and the vision and the brand that we have built is very viral. So we don't spend money on marketing at all. All of our customers are acquired organically, which is rare. We've been able to build products in 100 plus countries and acquire customers there without needing to pay a bunch of influencers to tell people to download our stuff, which I think is rare and cool and speaks to the quality of, the vision we're selling. I mean, to be totally candid, it just speaks to how powerful Bitcoin is. It's not that hard to sell something that's growing 50% a year against debasing pieces of paper. And so, and we're really emerging as, one of the leaders of Bitcoin financial services globally, and lean, profitable, stacking sats. And I thought customers deserve to know our financial position, how strong we are, and that the future of their financial services and the business is in really good hands, and that I'm more than capable of running two businesses. That was a lot of the reason why we did that.
Yeah, there's a saying that I believe in very strongly, which is if you want something done, give it to a busy man. Somebody's got too much time on their hand, they're probably not going to finish something. But if they're very busy and they have a lot to do, they're going to figure out the easiest, smartest way to do it.
100%. Yeah. And I think One of the things I'm most proud of is Strike. Listen, we're disruptive because we're into Bitcoin. We're disruptive because we focus on Bitcoin and not shit coins. We've done a lot of things well. One of the things that I'm most proud of is the culture. We've had a culture of we must be profitable. At one point as a founder, I realized venture capital, like kick the can down the road type of fundraising for unprofitable companies is a scam. It's bullshit. It's unjust to have these things exist in society. An unprofitable business to me means the company is consuming more from the world than they're producing value to the world. That's bullshit. I did not want to be one of those people. And so we almost took it as a cultural cornerstone for us is we need to be profitable because that's the right thing to do for the world. We want to produce more value for the world than we take from the world. And so just like our hurdle rate internally is Bitcoin. If someone internally comes to me with hey, Jack, I got a really good idea. I want to start a new product. I want to hire a bunch of people. I say, well, is this thing you're going to start going to grow faster than 50% year over year? Because you're competing against Bitcoin. And usually the answer is no. And so I say, get out of my office. Because if you can't outcompete Bitcoin, it's not going to get my time, energy in our balance sheet. Sorry. And so we've built a really strict culture that actually measures future success, not based on a debasing dollar with infinite sloshes of venture capital money in Silicon Valley, but it's measured against Bitcoin. And so we've been very lean, profitable, more from a principled standpoint. Like we find it a moral imperative to be profitable because it means we're doing good for the world on net. And that's turned into an amazing business. And so I think it's the restoration of ethics, morals, principles to building a startup. That's one of the things I'm most proud of amongst some of the other stuff. But I mean, we're less than 100 people. We got hundreds of millions of dollars on balance sheet, producing profits and extremely focused on our customers because we're measuring ourselves against Bitcoin. And we have, this really new age startup type of mentality and attitude as opposed to like infinite money printing Silicon Valley. You might as well lose hundreds of millions of dollars a year because you can go raise it again and buy billboards on the highway that no one actually cares about.
Yeah. One way I like to think about the Austrian business cycle theory, and I'm not sure there are other economists who discussed it in those terms, but ultimately what it comes down to is that when the money is devaluing, holding cash has a return of, let's say, negative 5%. So now you just created an enormous business opportunity for businesses that are making a real return of between negative 5 and 0% to appear nominally profitable. That's all that the Keynesians are doing. They're taking businesses that are actually destroying capital, negative 3% and negative 4%, but by destroying your capital more through inflation, it makes it profitable for you to engage in it. So they're taking away 5% from you, but if you put it in a bad business that is destroying only 4%, then that's good. So suddenly now, instead of just holding cash and waiting until you get to find the business that's going to pay you 5% positive or 10% or an opportunity that maybe gives you 20%, you are much more likely to go and find whatever opportunity, even if you expect it to give you negative 3 and negative 4. So that's how the capital is destroyed. And it's amazing. So many Bitcoiners tell me the same thing that you just said, that once you start shifting into a world in which the money is appreciating, then that's gone. And now suddenly you have much higher standards. Negative 3 is not going to cut it. Negative 4 is not going to cut it. But also 3 is not going to cut it. 4 is not going to cut it. 10 is not going to cut it. You need to really push yourself and you need to really do something that's worthwhile. Or at least try and be very lean, to try and use as little capital as possible, because you don't want to spend more capital than is necessary, because the opportunity cost is you're going to miss out on Bitcoin's appreciation. So for me, for instance, on a personal level, I mean, obviously my website is nowhere near as big as Strike, but from day one, it had to operate on a monthly cash flow positive basis. I started small and I started making revenue, and I just made sure that pretty much every month I earned more than I spent. And I had to just continue to do that so that I don't lose Satoshis. And I think it's worked out so far. But yeah, it's an entire mentality shift compared to living in fiat world, where it's a race to who can destroy capital less than everybody else. The Bitcoin Standard podcast is brought to you by thesafehouse.com, my independent publisher and bookshop, selling the best Bitcoin books in high-quality cloth hardcovers built to last for generations. Most books these days are pretty fiat. They're flimsy and they fall apart quickly, and I did not want that for my books. So I set up the Safe House especially to provide you with beautiful, long-lasting classic cloth hardcovers you can proudly pass down for generations. You can get copies of my 3 books, The Bitcoin Standard, The Fiat Standard, and Principles of Economics. And you can also get copies of Lynn Alden's Broken Money, Parker Lewis's Gradually Then Suddenly, and Matthew Lysiak's Fiat Food, to which I contributed a few chapters. We now offer bulk discounts so you can buy books for yourself and for the friends and family you'd like to learn about Bitcoin. Buy any 2 books for $50, any 5 books or more for $20 per book, and for more than 50 books, it's only $15 per book. Go to thesaifhouse.com, the S-A-I-F house.com, where you can get all of these books in high-quality cloth hardcovers, delivered worldwide, and get 10% off for paying with Bitcoin. The Bitcoin Standard podcast is brought to you by the Daylight Computer. I love to work early in the morning and late at night, or in the sun outdoors, but regular computer screens are terrible at these times, and they strain your eyes. For years, I've wanted a paper-like electronic screen on a simple computer I could use to write. I tried several models, but none were very good. Now, finally, Daylight have delivered a fantastic full-function tablet with a paper-like screen that's easy on your eyes and great for outdoor use. I've been using the Daylight computer to write my next book, and it is absolutely fantastic, and it has led me to invest in this company myself. Check out my interview with Anjan Kata in episode 249.
Exactly. Yeah. I mean, for all the entrepreneurs out there, take it from me, this was my lived experience where, to Saif's point, what you end up realizing at the end of the road is being profitable is actually a moral good for the world, because what it actually means, if money is your time and energy in an abstracted form, it is the value and the labor and the effort that we all contribute to those around us abstracted in a market good. That's what money is. If that is, and it measures who owes what to whom at the end of the day. Being profitable means you're delivering more value to those around you than you're consuming from the world. It is quite literally the financial way of saying you're making the world a better place. And so that should be the baseline goal for anyone starting anything, and anything that financially and mathematically isn't making the world a better place shouldn't exist. The free market should punish and crush and make these businesses, these ideas extinct, because it's a net negative to the world. Now, when I was an entrepreneur and I first started out, I didn't understand all this. For those listening, I'm 31 years old. I got into Bitcoin when I was 18. And so a kid when I started my entrepreneurial journey, trying to wrap my head around what Satoshi had created. And I would say in the last market cycle, I had so much when, what went down with El Salvador and we integrated Lightning with Twitter, I had so much venture capital money thrown at me, Saif. There were a lot of people that liked the attention and liked the headlines that were around me. I didn't have the best people around me. And when the market corrected and the bear market happened, I had to go through this experience very painfully on my own, which was, am what I've built good for the world? Because we were losing money. We had achieved a lot of headlines, a lot of Twitter followers, a lot of stuff, but we weren't cash flow positive. It was hard for me to really wrap my head around measuring what was good for the world if it was up to a venture capitalist to determine the value that I was building and the vision that I had embarked on. And what you come to realize is, measuring in future fundraisers from venture capitalists and a depreciating currency, to Saifedean's point, it's a game of, who can lose money in the most attractive way under the negative 5%. So, I mean, even before we made these announcements, Saif, there was a blue chip Silicon Valley startup that published an article on TechCrunch. My chief of staff was like, hey, you got to read this article. It's funny because they're talking about their top line revenues and how much growth they've had and how much customers they've had. But at the very end of the article, they mentioned they're still not profitable and they need to raise money. And so it was this whole article of like, we were making hundreds of millions of dollars in revenue. We're growing all this. We opened an office in London. We're amazing. Look at this very Christmas card-esque picture of our founding team. But at the very bottom, it's like, but we lose $50 million a quarter and we need to raise money to survive. And that actually motivated me to publish our own numbers and talk about my experience as a founder in Bitcoin and realizing the fiat game is a muck and the top line revenues don't matter. The bottom line profits actually matter. And that if you give people hundreds of millions of dollars of fiat, they're just going to puke it on marketing, on new products, on hiring a bunch of people. And it was through that experience that I kind of pivoted. I changed the culture and the energy around Strike, what we were trying to do. And since then, it's been a rocket ship. So I'm thankful for those experiences. But for those entrepreneurs out there, hopefully you take it from me and you don't have to live it yourself. Be profitable, which is a moral good for the world. Measure yourself in Bitcoin, not in dollars. Don't be part of the scam.
Yeah, absolutely. No, I agree entirely on there's a lot of negative connotations to wealth and to capital accumulation that people have, but there's nothing better than turning a profit. Turning a profit means you're taking things that society values at X, and then you're turning them into X plus something through the magic of economic production, if you do it correctly. And that's just a good thing. You're getting rewarded for doing something valuable. If you're buying everything voluntarily from people, and if you're selling everything voluntarily, then you're, by the admission of all the people paying you and buying from you and selling you, your subjective valuation of the goods that you produce is higher than the subjective valuation of the goods that you consume. So you're doing something good. And if you're not turning a profit, then you're destroying capital. And this is, it's morally good. It's good for your psychology. It's good for you as a person. But also, I think what many people miss is that economic calculation, this is the point the Austrians keep harping on about. Economic calculation is what allows the coordination of economic production. So you shouldn't just think of profit as being good because it makes money. You should think of it as the compass that drives you to know what to do, what decisions to take. And it's a blessing to have a market in that regard, because it tells you, you do this, then you don't make a lot of profit. It's telling you that's not good. Don't keep going that way. You're doing this other thing that's making profit. Keep going there. Double down on it. Invest on it more. Find out how you can make it better. Increase the quantity of products. Decrease the...
Yeah. A story from Strike. So to continue the story I was telling, we were focused, my initial theory was around Lightning, and I think I'm right on the general trend of Lightning. I was wrong on the timing. I thought it was going to happen a lot sooner than it has. And whatever, you're wrong sometimes. It's not a big deal. But really for me is, I ended up taking the ego out of, when I was a kid, I thought my job as a CEO of a company was to predict the future and know what's best for other people. And you realize that's just you being an asshole. That's not your job. Your job is actually to listen to customers and build for what they want. And when we changed from we're going to try and make this Lightning thing happen as fast as possible to Bitcoiners just want us to build Bitcoin financial services, and who knows better what they want than them? The trick question, nobody. And as soon as I went through this, period with myself, and we just started listening to our customers, Safe, profits, we're just overflowing with profits and growth and positive feedback. And to your point, the market and customers have been our greatest guide. And it's been incredible for us. So anyway, that is a real life story I lived through, is just by listening to the market and being guided by profits, we've become an immensely customer focused business that's found our way into stacking sats and growth and prosperity as a business, as opposed to, not being guided by capital allocation and formation, to your point.
Yeah, I think that whole notion of I know better than the market, this kind of struggling artist who wants to produce the art that people don't value because people are stupid and they don't know what art is a perfect recipe for being miserable and depressed with the rest of your life. Embrace the people, give the people what they want, learn to like what they like. As I like to say, everything you want is on the other side of giving people what they want. Everything you want, you can get by giving people what they want. So take that chip off your shoulder and stop thinking that you know what's better for people than they do.
It's taking the ego out of it. That's the culture we have at Strike. And actually how we got to the lending product in the first place is because Bitcoiners were asking for it. And so you could think, lending in this industry it's a dirty word. It's scary. There's past history of, people getting burned with really shady criminals like Sam Bankman-Fried. But for us, Bitcoin started out with a market cap of 0. Now it has a market cap over $2 trillion. So there's been trillions of dollars worth of wealth created for Bitcoiners. And they're all coming to us and saying, we want a transparent, trustworthy way to borrow against the best performing asset in human history. And we think you can do it for us. And so again, it's taking the ego out of whatever I think the future will be. Doesn't matter. I'm in a position where I have the technology, the balance sheet, the team, the licenses, the distribution to provide financial services for Bitcoiners. And I shut up and I listen, and I take my ego out of it and I flush it down the toilet. And so when they said there's no credible lending solution that's been done at scale with transparency, trustworthiness, with effective pricing and large pools of capital, and that's what we built. So Strike's just been an iteration of Bitcoiners evolving as this industry grows, to be honest.
Yeah, no, absolutely. And so, what is the main source of revenue for Strike now? Is it just fees on transfers or buying Bitcoin?
Yeah, our biggest business is the buy sell, the brokerage product, but we're predominantly buy side. So our customers don't sell a ton, they buy. We have seen growth in selling as we've been able to grow and meet some demands, but we're actually already seeing a reduction in Bitcoin sales because these customers are borrowing against the asset instead, which is awesome. And we have other business lines. We have B2B products. We have an API. We do have our Lightning business, but I would say our Bitcoin brokerage service is the biggest business line. The lending one is already growing a lot. It's been live for not even a month, and it's a very popular product, I think, for obvious reasons, but it's predominantly this buy sell. And the last thing I think is interesting is you can kind of track what I think people misunderstand is, yes, Bitcoin is for everyone. Yes, I think what's happening in Africa and Latin America is fascinating, but at the end of the day, Bitcoin is competing to store the world's cash balances. And where we've seen the most growth and the highest volume of business is in parts of the world with the largest cash balances. Bitcoin is a wealth transfer. And so in order to track where it's most popular, you should just go where the wealth exists. So our biggest business line is the United States. After that is Europe and the UK. And then after that are a lot of the emerging markets. And so I think it's very validating to see our numbers and see under the hood into our dashboards and realize that this is just a grand wealth transfer going on, and people are recapitalizing their cash balances into this asset class from wherever, US real estate, the UK stock market, et cetera, et cetera.
Yeah, I think a lot of us initially thought that Bitcoin is going to be a lot more popular in poor countries and countries that have high inflation. I think it's, it would have been nice if Venezuelans and Lebanese and Zimbabwean people had stacked sats really hard over the last 5-10 years. But I think, from personal experience, I just, and I saw this in Lebanon firsthand, and I see it when I travel around and I talk to people in places like the US and Canada. I think it turns out that ultimately at this point, the real use case, the real demand, the real thing that is going to drive significant amount of interest in Bitcoin is demand for storing value in Bitcoin, is for demand for cash balances. And that's just going to come from people who are used to saving, people who have savings, people who have stock portfolios, who hold bonds, and who are financially savvy and who are just always have the ability to save for the future. And sadly, if you're in a place like Venezuela, Zimbabwe, Lebanon, if you've gone through hyperinflation, your wealth has been destroyed, and you don't have the I wouldn't say you don't have the luxury. I think everybody should be thinking of the future, but it's much more difficult to think of the future in a place where you've had that and you don't have a lot of cash balances and you're trying to make ends meet for the end of the month. It's a lot harder to see serious demand for Bitcoin in these kind of situations. And it's just the way it is. Ultimately, this is money, and the money is going to end up in the hands of the people who have money.
Exactly. And one of the stats we released at Strike, our fastest growing customer cohort is actually the customer base that's doing $50,000 to $500,000 of volume with us a month. So these customers are doing millions of dollars of volume with us a year, and that's our fastest growing customer base. So again, we do have customers all over the world. We are seeing growth in these Latin American, African regions that are significantly poorer than Americans. But the fastest growing and the most volume, to Safe's point, it's obvious. It's coming from the people that actually have the cash balances. Something that, my mental model personally and extends to both my businesses is that, humans own a little over $900 trillion worth of stuff. That's currencies, nation state debt, real estate, stocks, precious metals, collectibles, art, just all the stuff that we own in the world. And about half of that we've monetized as savings. So people own houses, not necessarily to consume them and live in them, but to store and save their wealth. They own art, not necessarily to put on their wall in their living room for their kids to throw spaghetti at, but they're using it as a savings account to store and persist wealth. And I think Bitcoin's competing over that $400 to $500 trillion opportunity. And so if you want to see where the wealth transfer is going to happen, look under the hood to where the $400, $500 trillion worth of savings is looking for a potential new home. And that's not as much in Latin America and Africa as it is in Manhattan, as it is in California, as it is in London. And that's what we see in our numbers. And we see growth all over the place. I think there's a different set of products that are appealing to the emerging markets. But yeah, it's very validating to understand where Bitcoin is appealing, why it's growing, and what's happening.
This podcast is also brought to you by the Bitcoin Way, your professional Bitcoin IT team offering you personalized, secure, and comprehensive solutions for every step along your Bitcoin journey. The Bitcoin Way offer live concierge service to guide you with your Bitcoin cold storage, running your node, privacy best practices, inheritance planning, corporate strategy, and multi-sig solutions. They don't touch your coins, they guide you through the process of acquiring your coins and securing them. If you'd like to make your setup safer and more reliable, book a consult with them and see what they have to suggest. If you want to give someone the gift of Bitcoin, get them this professional service that will ensure they start off knowing exactly how to manage their coins and not lose them. Go to thebitcoinway.com and start Bitcoining more confidently. Yeah, what kind of products are you finding most appealing in poorer countries?
So what's fascinating is we integrated Tether in this wallet. That we think of our product almost in two ways. We have the developed market product where US, Europe, UK, we support the local currency in our suite of Bitcoin products. So we support the dollar, the euro, the pound. And that's because these customers get their paychecks in this product. These dollars and euros and pounds aren't going through necessarily hyperinflation. They go to the grocery store with it. It's fine. And they also, by the way, no one in America has ever, I find this fascinating, no customer ever has asked us, I don't want you to integrate with my Chase Bank. I want you to integrate Tether for me in California. No one's ever told me that. So I actually don't know who uses USDC or why. Because as an American, I have a Chase account, I have Cash App, I have Venmo, I have PayPal. Why would I need a stable coin? It's beyond me. And as someone who runs a big business in America, I've never heard a customer ask me for that. Now, outside of the developed world, Latin America, Africa, some parts of Eastern Asia, all we get is don't integrate with our banks. Our banks barely work. The technology here sucks. Give me Tether. Instead of the Ghanaian cedi or the Nigerian naira or the Turkish lira and Bitcoin, I want a wallet with Tether and Bitcoin. And no one ever asked for USDC in these markets. It's only been Tether. And I know they're the co-founders now on a separate business with me, so it's going to come off now as bias. But this is a true story where we were like, oh, crap. Give the people what they want, which is Tether and Bitcoin. And that's the product that's gone viral in these other markets. And we see a lot of the payments activity split between Tether and Bitcoin. And a lot of the financial activity is interesting. I'm really excited to get our lending product to these markets because I'm stoked to give some of these poorer countries an ability to save an asset that's compounding at 50% on average and borrow tethers. And that should, I mean, by accessing collateralized debt, it actually should help people build wealth. But we'll see, but we're seeing pretty interesting behavior with the stable coins there. And in Europe, no one's ever asked me for a Tether or whatever.
Yeah. I mean, basically, if you've got a functioning USD bank account and a USD credit card, you don't really need Tether. But the vast majority of the world doesn't. The vast majority of the world doesn't have that. So I think there's an enormous market opportunity for Tether. It's been astonishing watching their growth. It really is. I was very skeptical that they could pull it off, and they just keep delivering.
Yeah, I mean, I think what people should know, I've co-founded 21 with Tether. So I've been friends with them for a really long time. I've been in Bitcoin for almost 13 years, and they've been around just as long. And I say that to say everyone that was around back in the day, we're all friends because there just weren't that many people in Bitcoin. With that being said, I'm not a Tether employee. I don't speak on behalf of Tether. And by the way, I don't have an interest in their business, like their stablecoin business at all. I'm speaking as the Strike founder. People love their product, and their product competes directly against these shitty currencies in these poor markets. It doesn't compete against Bitcoin, in my opinion, and from what I've seen at Strike. And so it's been remarkable to see the breadth of demand. I mean, they have over 400 million active wallets, which is insane. They have more active wallets than there are people in America, which is outrageous. And so there's a clear demand for access to the dollar digitally in a convenient way. And screw Tether, I would say the private sector has figured that out, where big government and stupid banks like Chase, are slow, clunky. They've built their businesses on regulatory moat and access to the money printer, as opposed to being technologists and customer focused and forward thinking. And so the private sector has figured out how to meet the demand of these poor countries that go through hyperinflation and have terrible central banks and currencies. And it's turned into, who knew, an amazing business that, they're basically onboarding Argentine cab drivers onto US debt. And so now, America loves it, the Argentine cab driver loves it, and Tether takes the profits and plows it into Bitcoin and starts businesses with me like 21. So I think it's fascinating, but it's actually very logical when you think about it. They're just a full reserve bank that is actually technologically savvy and ethical, in my opinion.
Yeah, and a lot of people in Bitcoin land like to shit on Tether and say that it's a shitcoin, it's a dollar, it's furthering dollar hegemony, and I can sort of sympathize with that. I'm no fan of the dollar, and I'm no fan of treasury bonds. But as I like to say, let he who is without a US dollar checking account and credit card cast the first stone. Everybody in today's world needs a US dollar bank account. And it's funny, a lot of the critics of Tether, they're not even into Bitcoin significantly. They buy maybe a little bit of Bitcoin, but ultimately, no matter how much Bitcoin you have, in today's world, you need to use fiat payments. You need to pay rent. You can't orange bill everybody. Mm-hmm. The size of Bitcoin cash balance is about 0.5% of all the world's cash balances. So every time you're trading with somebody, the expected value of Bitcoin on their balance sheet is about 0.5%. So almost certainly they're not going to want to buy and sell in Bitcoin. Somebody like me is a bit of an exception. My website mainly sells to Bitcoiners. So it makes sense. And I hold a lot of Bitcoin, and they hold a lot of cash balances in Bitcoin. So about a third to a half of my revenue comes from Bitcoin. Does that make sense? But if you're buying a no coiner good, where all the rest of the customers are not Bitcoiners and the business is not Bitcoiner, you can't orange pill them all so that you can spend your Bitcoin. Just get a checking account and use it, and it's fine. You can still call yourself a Bitcoiner, and you're not going to kill Bitcoin by doing it, because ultimately what matters is the size of the cash balances. That's how Bitcoin wins. That's really what matters. We need to stack sats as hard as we can, and inconveniencing yourself by making it more expensive for you to engage in transactions by having to, say, pay physical cash so that you don't use the banks or whatever. You're just making it more expensive for you, and therefore ending up stacking fewer sats and making it take longer for Bitcoin to eat the dollar.
Yeah, I had a conversation with a customer in Argentina, actually. This was years ago, but to get us at Strike to the position we are, the customer's on Bitcoin Twitter and is seeing the rhetoric of Bitcoiners calling Tether a shitcoin and prolonging the dollar's hegemony. And I also can sympathize with that as well. I was one of those people that held that opinion. What I would say though is the customer came to me and was like, listen, man, you already support shitcoins. You support the dollar. You support the euro. You support the pound. Those are also shitcoins. And you support shitcoin rails, which is Fedwire, which is ACH, which is SEPA, which is UK faster payments. So you support shitcoin rails and shitcoins already. Who are you to tell me, someone living in Argentina, that you can't support my preferred shitcoin rail, which is Tether? Like, who cares? And go back to the Americans and say, we're not going to support Fedwire, we're not going to support ACH, and we're not going to support your Chase bank account because they're shit coins. Good luck then using Strike and having a smooth experience onboarding Bitcoin. And God forbid you have an emergency medical surgery or you want to buy a house, go screw yourself. And he was like, obviously that's not the right approach. So yes, Tether is a token and it could be conflated with shitcoins. But the reality is, why would you as a founder make me sit in the Argentine peso or make me use Binance? I want to use Strike. And can you just support our preferred fiat shitcoin? And that conversation, I was like, oh, again, I need to take my ego out of this. It's not my job to decide how people in Argentina manage their finances and then marginally increase their Bitcoin cash balance based on their financial position. That's not my job. And by the way, no decision I make is going to encourage them to store more of their cash balance in Bitcoin. Like, these decisions are made at the margin. And people are going to, every single day, we all wake up, we all do stuff for the world of value, and then we have a decision to make in real time. How do we want that value to be persisted and exchanged later? And people are going to have access to all sorts of tools to persist and store that value. And increasingly, people choose Bitcoin. But that's, to Saif's point, it's a process that's going to take time naturally. It's not going to go from $2 trillion to $200 trillion in 24 hours. And so that conversation and conversations like it really flipped my brain around and was like, oh man, my ego's in the way. I need to listen to these people, and they have a preferred shitcoin. Like, I like using the wire system and the dollars in America. They like Tether and whatever rails, who gives a shit? And it's just helping them become Bitcoiners. Yeah.
Exactly. And yeah, that's the key point. You said there's nothing you can do to make them get into Bitcoin. I don't think so. I think, remember what we were saying earlier, it's people that suffering from hyperinflation that are not able to get into Bitcoin because they don't have cash balances. Whereas people who do have access to the dollar and the euro and the relatively better fiat currencies, they're the ones that are able to maintain their cash balances relatively, and so they can get into it. So when the Argentinians and the Turks and the Brazilians stop using their local shitcoin and they have a cash balance with the US dollars, they're going to become much more likely to start getting into Bitcoin because they have cash. And also because on a practical level, they've got an app that allows them to move Tether around. They get the intuitive idea behind private keys, public keys, how you use that. And then it's going to be very easy for them, the same way that they made the upgrade from the Argentine peso to the dollar. Then it's the next step from the dollar to Bitcoin.
That's a great point.
Yeah. And I generally, I'm not too negative about Tether because of that, because ultimately, I saw people use it. I remember in Lebanon, it was a lifeline for a lot of people. So it's completely callous to just say, no, they shouldn't use it. It works.
Yeah. And also, I mean, this is now getting the technicals of the fiat system, but Tether doesn't own 10-year treasury bonds. They buy these coupons that need to be refinanced every, 3-6 months. And so they're not, the US government can't finance itself. They're not the preferred lenders to the US government either, by the way. They're buying these short-term, effective like bank deposits that are underwritten by the US government. And so I would say, listen, if the United States comes out and says, hey, new rule, if you're a stablecoin, you need to buy 100-year garbage bonds with all the customer deposits, then all of a sudden you're talking about, stablecoins being strong-armed into financing a government that's just perpetuating this garbage system. But the reality is they're servicing demand and helping people. They're buying these coupons. They're taking the profits and changing the world and buying Bitcoin. My customers are happy. The US is happy. Everyone's happy. I just see it as the private sector doing, the work that governments and the co-opted banking system, what they couldn't do with their fractional reserve nonsense, and the fact that they've persisted their businesses through regulatory moats and through strong arm lobbying, as opposed to competing in the free market. Like, if Chase was actually good leadership, good technologists, they would have built this product 20 years ago, but they're not. They spend their time lobbying in Washington, DC. And so I see this as the free market and technologists and innovators doing good work for people around the world. They've helped hundreds of millions of people. I don't see a problem.
Yeah. And also, I think, yes, they're buying up a lot of treasuries, but ultimately, I think the key thing that a lot of people are missing is that a lot of that is not new demand for treasuries. It's displacing existing central bank for demand for treasuries. So people who are moving from the peso at the end of the day is just, in its ideal form, it's a dollar stable coin. The best thing that you could do with the peso is have a fixed exchange rate against the dollar, or at least maintain some fixed rate, so some close to fixed rate against the dollar, so that the peso is not devaluing against the dollar. You can't beat the dollar, but you can at least, hopefully. Many countries have managed to do this. I live in Jordan. They've been, for more than 35 years now, the exchange rate has been fixed against the dollar. That's basically your best case scenario. So how do you do that? How can you keep your currency fixed against the dollar? You need to be buying dollars and treasuries, and you need to be making a market in them, and you need to be able to redeem people's, when people want to dump the euro currency, you need to be able to buy it up with the dollars so that the currency doesn't go. And then when there's a lot more demand for your currency, you need to be able to sell some of it and accumulate dollars. So central banks hold enormous quantities of dollars, and Tether is just doing the same thing.
Yep.
Now, granted, they do it in a much more efficient way. That's their secret. So, Tether, they've got 100 employees, Paolo and his friends and cousins, basically, uh, running
Yeah.
a company that's making $13 billion of profit a year. It's the most profitable company in human history. 140 billion dollars is a medium country's money supply, and now compare a country that runs a 140 billion dollar national currency, and think about how much more inefficient it is than Tether, because it's not just, they don't just have 100 people running that central bank. They are running the central bank, they're running the entire government from that currency. So when you hold their stablecoin, their dollar stablecoin, which is the peso or the lira or whatever it is, you're financing the overhead of the entire government, the army, the police, the presidential palace, all of the theft, all of that is being financed from the money printing and from the business. So it's an extremely inefficient way of converting demand for dollars into a medium of exchange that people can use day to day. And it's a way that demands a lot of dollars. But now Tether is doing it in a more efficient way. So yeah, likely it will increase demand for treasuries, but it's not entirely new demand. It's not like those $150 billion in treasuries that they currently hold are, out of nowhere. They likely displaced a lot of the demand that central banks would have been holding.
100%. I couldn't agree more. I love the point on free markets in the private sector. Like, let entrepreneurs in the free market solve problems for people, and they will come up with the most efficient, cost-effective way. Like public sector, governments, and to me, like JP Morgan, Bank of America, all these too big to fail banks, they're effectively arms of the government, and they aren't innovators. They have not been building progressive technology. They've just been lobbying. And so, yeah, you're seeing the massively innovative profit per employee business, highly efficient, solve a problem for hundreds of millions of people with like 100 folks. And that's exactly how the world should be. That's the incentive of the free market and, capital structure. So I couldn't agree more. I mean, to be honest, like one of the dumbest things the Democrats ever did in America was poo-poo Mark Zuckerberg with his Libra token or whatever. Like, what idiots. I mean, that shows you just how, monstrous government has gotten over control, that they couldn't see the forest for the trees and realize that letting the private sector solve these problems, letting the free market go out and build technology, who would have been better at building technology and distributing the dollar to billions of people all over the world than the guy that has 4 billion daily active users? Newsflash, nobody. But government is too big and too power hungry and too stupid to realize that they got in that guy's way and shut it down. But inevitably, the private sector and like entrepreneurs in the free market are going to be the best and most efficient at solving these problems. So to me, the fact that the US government has come all the way around to realizing Tether is a good thing, innovation is a good thing, progress is a good thing, demand for their debt is a good thing for them. It just flies in the face of everything they claim to be. It's like, you idiots, 4 years ago, you were trying to kill this industry. Now you're supporting it. You look like clowns. And now looking back, the best thing you could have done is support Mark Zuckerberg in innovation. But you guys are just too power hungry and stupid. You couldn't get out of your own way.
Yeah, but I mean, let's face it. I'd much rather have Paolo handling this thing than
I mean, I'm these are my co-founders on 21. And I think, these guys are awesome innovators. They're Bitcoiners at the end of the day, as I mentioned. So I think the universe doesn't make any mistakes. Let's be clear. I think they've earned through proof of work the position they're in, and they've done a tremendous job building the business and then using their resources to further influence the world in what they think is the right direction. I mean, Paulo's out investing and innovating in neuroscience. He's out and building self-sovereign, locally hosted AI to compete against Sam Altman's monopoly over understanding everything about your life. He's building P2P communication chat. So, I mean, I think these guys deserve to be in the place they're in. And I feel very confident that they're going to have ethical interests into what they do with the resources. But yeah, my point was more just the US making a mockery of itself, being so power control hungry that they're flip-flopping on whether stablecoins are good or not. Just, it's the public sector's a mess, the most inefficient misuse of capital like in human history is people with the money printer that elect themselves to just pour money into stupid, power controlled ways. And you can see, if you let the free market do its thing, how efficient humans are. They can take 100 people, work in a room with Paulo, and change the lives of 500 million people, right? While fighting the most powerful governments along their journey. That's just how awesome human beings are if you just get out of their way.
Yeah, absolutely. And the thing is, they're buying Bitcoin. And for me, recently, I got this, I'm beginning to think about this, that Tether might actually play an important role in the transition to a Bitcoin standard. Because as they keep, if they keep growing, and they keep selling more USDT, buying more treasuries, they're going to make more profit, and they're going to put that into Bitcoin. Now, their Bitcoin is going to go up over time. Their dollar is going to go down over time. And then over time, their liabilities, are going to become a lot lower in real terms value compared to their balance sheet, because their Bitcoin is going up. So there will come a point, I think, in which they're going to have to break the peg, but they're not going to break the peg downward. I think they're going to break the peg upward. I think there will come a point in which Paulo is going to say 1 USDT is equal to $1.02. And then maybe every year they're going to add another 2 cents to it. And then it's just going to keep going up, because the dollar is going to keep going down. And then maybe if they add 2% per year to the USDT, they make it redeemable for a larger quantity, then maybe USDT becomes a better currency than the dollar, because the USDT has a lot of Bitcoin backing it. So they're able to increase the value of their currencies compared to the dollar. And so then as the dollar continues to circle the drain, the USDT can have some kind of orderly alternative, which increases over time in value. And therefore, as Bitcoin increases more, the dollar drops less and less and less. Eventually, you keep bringing up the value of the USDT, and then you just peg the USDT to Bitcoin, and no longer need to peg it to the dollar.
I couldn't agree more. I mean, listen, I think they're running a dollar product. They're running a bank the right way. They're holding the coupon, the short-term US debt. There's more reserves for USDT than there is USDT, because they've been purchasing and holding both gold and Bitcoin safe. So these are two assets that have scarcity elements to it that are performing tremendously well. I think what's happening with the Trump administration is fascinating. I mean, he's pivoting away from tariffs, and now he's onto this capital controls idea. But the point is basically, hey, foreigners, get your money out of the country. The deal was you have to buy treasuries, not our stock market, not our land, not real estate, and bid up and cause tremendous amounts of asset inflation in the country and create a wealth gap here. Get your money out, and effectively telling them, buy gold, buy Bitcoin. And here you have a bank for 400 million people effectively that is over reserved with gold, Bitcoin, holding short-term coupons. I mean, I think what Tether has, a Tether Gold product, by the way, I think is very forward-looking. Like, how long before the world wants digital open network version of gold that's easy to remit, that's easy to transport, that's easy to settle trade? Like, is the world going to use Tether Gold as well? And then to your point, at one point, if the dollar is debased enough, can they incorporate Bitcoin? And I think so. So yeah, I think it's, what if the world had a full reserve or over reserved bank that was technologically forward, built by pioneers, innovators? It was the private sector, so they were incented by profits. They were incented to keep itself lean. They had a hurdle rate that was reasonable. Like, what if that existed? And that's what we're looking at. And contrast that against Bank of America, by the way. If the US 10-year gets above 5%, Bank of America is functionally insolvent. So compare Bank of America to Tether, and so yes, I couldn't agree more.
Yeah, I mean, this is when I changed my mind on Tether, and this is when I was comfortable publicly saying that this thing actually has a use case. When I saw what happened in 2022, when everything was falling apart, and Tether had to redeem something like $20 billion over a weekend, or I don't remember the exact numbers. Mm-hmm. I discussed it with Paulo. I hosted him in the podcast, so check it out if you're interested. We talk about the details of the numbers. But basically, This was bigger than any redemption that any bank in the fiat system has ever had to do. JP Morgan has never had its customers come up and say, hey, we want to liquidate everything we have to with you, and we want to get cash out. And that adds up to $7 billion or anything. I mean, can you imagine what would happen if somebody went to JP Morgan or Citibank and said, hey, I want my $20 billion?
I mean, we saw what happened with Silicon Valley Bank, right? They're no longer.
So, yeah, and that was a lot smaller of a sum, you know?
Yeah.
I think a 20, I think what Tether withstood on that day, I think would have broken any bank in the world, and not just the bank, but I think the entire banking system. I think that it would be a Mad Max world if somebody were to go to JP Morgan or Citibank and tell them, hey, I want to get my $20 billion out over the weekend. And yet, 100 guys in Switzerland on their laptops managed to do this. It's absolutely astonishing. And it's just, there's no way around it. This is truly a very powerful innovation.
Yeah, I couldn't agree more. And I mean, my friendship with these guys was before Tether even existed. So, a similar group created Bitfinex, which is one of the largest exchanges in the world. Bitfinex is the first to integrate Lightning. Bitfinex and Tether now have domiciled in El Salvador, where, I was a material part of that government's journey into Bitcoin. And so we've overlapped over the years. I've only gotten to know the business just like everyone else over Twitter and seeing their attestations and stuff. But I've known these guys for over a decade just because they're Bitcoiners. And so, we also, like our founding story for 21, these guys are Bitcoiners. We were watching what Saylor was doing. We thought we could bring something new and exciting to the marketplace, into the capital markets with a slightly different vehicle. But it's remarkable what they've built. What they also I'm an entrepreneur as well. What they've been able to overcome as far as adversity. I mean, you got to be a special type of person and group of people to persevere through what they've been up against. And it turns out it's a great business, and they're changing the world now in a plethora of ways. I do really encourage people to look at all the money and investments there. They're trying to change neuroscience. They're trying to change AI in a distributed self-sovereign way. They're trying to change P2P communications. Now they're bringing a vehicle to capital markets with me in the US. I don't know. It's a cool story. And they're good Bitcoiners.
Yeah, they're stacking sats ultimately. Although, I mean, it's not all great. They are investing in Juventus Football Club, which I think is inexcusable. But
I don't know much about that. Okay.
All right. So now tell us about 21. What's going on there?
So 21, we want to give the U.S. capital markets a unique type of vehicle, what we consider unique. Carrying the story forward. So I've known the Tether guys forever, and it's been, the analogous campfire, the conversation all Bitcoiners have, like, wow, you see what Saylor's doing, you see what this guy's doing. And 4 or 5 years ago, we couldn't believe what Michael was pulling off, listening to probably your podcast with him. And I think Bitcoin has always inspired the most creative thinking I've ever seen. It's just such a free market. There's no interference or intermediaries that get in the way of people coming up with clever ideas and testing the marketplace. So we were just cheering Saylor on as Bitcoiners. I would say, that was 4 or 5 years ago. Maybe 1 to 2 years ago, we'd seen the industry evolve, and some smaller cap companies had copied Saylor. There'd been a lot more institutional demand for Bitcoin, a lot more, bigger appetite in the capital markets. And we thought, a lot of the smaller businesses that had pivoted to Bitcoin, these are businesses, Saylor always talks about businesses that needed Bitcoin. Bitcoin's on a need to know basis. Like maybe their old business was failing. Maybe they needed new life. Maybe they needed new growth, and they're pivoting to Bitcoin in a smaller cap capacity. And on the Michael Saylor MicroStrategy side, we think there's an opportunity to build technology with a balance sheet that big and with access to capital markets. Like Paulo and I, we've built really high margin, high profit, high growth technology in this sector at Strike, at Tether. And so it's this combination of, we wanted to bring both blue chip credibility and startup upside. We wanted to bring a vehicle that was big enough to win, small enough to grow. So we're not coming to the market with hundreds of millions of dollars. We're coming with billions of dollars initially. We're already the 3rd largest treasury in the world. So we can fill that institutional demand, so to speak. Like we can, like an investor, like SoftBank gave us $1 billion check. we can take on that level of demand, no problem. But we wanted to bring the startup upside. We think that there's room to build technology, that we don't need to be a hotel or some pivoting business. Not that there's anything wrong with that, by the way. Clearly, I mean, MetaPlanet is killing it. But we didn't want to be a business that was pivoting from something in the past. We're purpose built and founded to be a Bitcoin company. We're going to build Bitcoin technology, and we're going to use the capital markets in our balance sheet to acquire as much Bitcoin as possible. And we thought that that was something that the capital markets hadn't had yet. And watching the story evolve, we were waiting for someone to do it. And at one point, sitting around the campfire, we looked at each other and we're like, who better to do it than us? Both Strike and Tether are, as successful for gross and net profit per employee as there is in Bitcoin. We know how to do these things. We have lots of capital. Tether has lots of money, as we just talked about, and we might as well be the change we wanted to see. So that's the founding story. And yeah, there's lots of fun stuff to talk about, but.
Yeah. So, I mean, do you see any kind of differentiation between what you guys are doing and what Sailor is doing?
Yeah, I think the main differentiation is that we want to build Bitcoin financial services. So we think there's opportunities in the lending market, in the credit market. We filed this all with the SEC already. We think we can generate cash flow, and a lot of our actual operating company will be focused on Bitcoin. There's ways to leverage Tether and their network. There's ways to leverage stuff I've done with Strike. We think to actually build cash flow and a business that's going to be growing and stacking sats with cash profit. I think that's probably the biggest differentiator. I think Sailor hasn't embarked on building Bitcoin software yet. I don't know if he plans to. I'm sure he will at some point. But for us, that's probably the biggest one. We have similar KPIs, like we measure Bitcoin per share, Bitcoin return rate. So we don't want to be measured in fiat, similar to Sailor. He's got BTC yield. But I would say, yeah, for Sailor, he's plenty big for institutions, right? I mean, it's a $100 billion company at this point. But we hadn't seen him extend that opportunity to build software and build products. We think there's going to be, if Bitcoin's going to be a $2 trillion asset going on 20 trillion, going on 200 trillion, people are going to need financial services at a severe scale. I don't think Coinbase is going to be able to do that. And I don't know if MicroStrategy is interested in doing that. We are at 21. Paulo and I absolutely are. And then for the other Bitcoin treasury companies, not that there's anything wrong with them, but they're just a little bit smaller. So you're talking about market caps of, a couple $100 million, and someone like a SoftBank can't call them and say, I want $1 billion worth of exposure. I got real size capital. The fixed income market's in trouble. The 60-40 portfolio is dead. Bonds are a shitcoin. And there's a lot of money on Wall Street that I've been meeting with that need a new home. And we needed a company that could actually soak up that size of demand. And so that's why I say big enough to win, small enough to grow, blue chip credibility, startup upside. That's kind of how we see ourselves relative to everyone else. But at the end of the day, we're all on the same team. I think sometimes people clip my podcast and try and put me up against Sailor or up against other Bitcoiners. And I don't view it that way at all. We're all on the same team, but I do think we're unique in those ways.
Yeah, and I think this is really the beauty of it, because in a sense, there's no real competition here, because the more you buy Bitcoin, the more you pump Sailor's bags, and the more he buys Bitcoin, the more you pump your bags. So the more people find new opportunities of doing these Bitcoin buying companies across capital markets with ability to access different capital markets, it's good for everybody involved. It's good for Bitcoiners and it's good for Bitcoin companies. So, there's just the other day, I was speaking at an insurance industry conference in Thailand. I was invited there, and the audience almost entirely no coiners. Nobody knows anything about Bitcoin. But there was this one money manager guy who was sitting there, and he was another speaker, and he told me, "Yeah, that's very interesting. Thanks for talking about Bitcoin. I'm going to look into it." He told me, I'm curious. I've been curious about Bitcoin for a while, but I didn't have the time to get into it and study it and figure out what's actually going on. But then I heard about this stock that allows you to do a Bitcoin play. So I put some money into this company called MicroStrategy, and I made $1.2 million just by buying MicroStrategy. And the guy still has no idea what Bitcoin is. But this is really how it works in fiat market. The way to be in fiat market is to just constantly, everybody's always moving money around, and it doesn't take them much. Your friend tells you about this great steel melting, steel factory in Spain or whatever. And so, yeah, you just pick up your phone and you buy a bunch of stocks. Somebody tells you about a new Australian mining company, you go and you just buy some stock. You read an article in the newspaper that talks about some new industry coming along, so you just buy a stock. And so it doesn't take much to get people to become curious about Bitcoin, but the bulk of the world's money is on these stock trading platforms. And so everywhere where you can show up in somebody's app with a Bitcoin product is going to just get a lot of money. And then it's just the mimetic power. Like, this guy obviously is a lot more likely to read about Bitcoin now that he's made 1.2 million thanks to Bitcoin than if he had not had that option and he'd spent all this time still trying to figure out where to go and how to read and which shitcoin exchange to use and so on. So I think it's an enormous opportunity. And I think you're probably going to see MetaPlanet and MicroStrategy and one of these is going to show up in basically most of the large capital markets. And there are eyeballs on each capital market, on all of the tickers on each capital market, and there are people who have to invest in them. There are companies and retirement accounts that have to invest in particular capital markets. Yep. And so wherever the money is, you pop up one of these companies, it's going to do great. It's going to show up, and it's going to print green candles, and that's what people want. The people want green candles, and that's what these companies can offer.
Yeah, I think a few things. One, I've always thought of Bitcoin as universal acid. Anything it touches, it conquers. You can't stop it. And so for the people that always say, why are you so focused on the price? Why aren't you focused on the technology? It's like, well, the price is the most important KPI we have, and it's our biggest marketing tool. And the fact that the price of both Bitcoin meme stocks and the price of the spot physical asset just continues to go up and conquer everything it touches, that is the best way to spread the message. To be clear, there is no like silver bullet podcaster. At the end of the day, people are going to be attracted to giant green candles because that's what we all want in life is, financial stability and in a way to afford the life that we think is reasonable. So that's for one. For two, yeah, I think I agree with you. I think in the US, there's a very unique story unfolding that I'm fascinated by. And one of the reasons we felt we should really go out and be the change we wanted to see in Found 21 is just what's happening in the United States. For the listeners, the way I think about it is we're unwinding from the world wars. Call it after World War II, a lot of the monetary regime setup and arrangements was very simple, is that the US was strong. They if you could claim a winner of the world wars, it was, in my opinion, everyone lost. But if you could say that someone won, it was the United States. They had the most gold at the time, the strongest economy at the time, the strongest manufacturing base at the time. And their claim was they were going to export their strength to help everyone else out, get back on their feet through the dollar by taking on the role of the world reserve currency. And so the arrangement was very simple through all of these Bretton Woods agreements and such is we're going to export the dollar and import goods and services from you guys. So you guys get to use our strength of our economy and the fact that our consumers are consuming so much by giving us food, raw materials. Russia's the greatest natural resource producer in the world. China's now the world's factory and manufacturing base. Germany makes really cool cars. Japan saw some of the biggest domestic growth of all time. And you're going to export to American consumers. We're going to export the dollar. So at the time, the dollar was backed by gold. Then all of a sudden you sever the relationship with gold and the dollar is backed by kind of oil at the time. We had an arrangement with the Middle East and a relationship there. Then that relationship fell apart. And then the dollar became backed by US treasuries. But then after 2008, China stopped buying those because politicians and the central bank prioritized Wall Street over their foreign trading partners. And then the dollar became backed by de facto the US stock market. And that's kind of where we've been today. And what's unraveling now is that China operates in $1 trillion trade surplus right now against the US deficits. And they need something to do with the dollars that they're getting. They can't reinvest them locally in their economy because that would strengthen their currency and weaken their export business. So they have to put the dollars somewhere. They don't want to put them in treasuries because those are real rates negative. Those are losing purchasing power. And so they've been dumping them into Facebook stock, into Amazon stock, into Nvidia stock. And that's where you get these companies that are trading at 50 times earnings, this irrational economic behavior, because all of the global trade surplus is being dumped into the US stock market. And now the United States and Donald Trump are saying, get your money out of our stock market. It's creating the most massive wealth gap in America. For those that don't have a college education, they don't benefit from this perpetual like market stocks go up phenomena that exists now in the US. And so you have an increasingly poor population in the middle of America. Those that live on the coast and have access to stocks are now getting ungodly rich without doing anything. And it's eroding the very like culture and of America. We have no manufacturing base. We have no middle class. And these American first trade policies that he's coming out with are saying, get your money out. And this is where I think this is a fascinating time to give the capital markets access to Bitcoin through the ways that we are at 21, which is the stock market is highly inflated because it's taking all of the trade surplus with foreign partners. And this is the dollar instrument that's been de facto backing the dollar for decades now, is just plow it into the NASDAQ. Who cares about the price? Sure, Google's worth 50 times earnings. That's such irrational behavior. That's ridiculous. And so now I think that's all unfolding. And capital has to find a new home. I think it's going to find it into Bitcoin eventually. Gold for now, for certain, if you just pull up a chart. But just giving these capital markets access to rotate out of highly inflated tech stocks and highly inflated basket of indexes and into a business that's acquiring a hard money that has a tremendously powerful balance sheet that's able to give you fixed income instruments like a Bitcoin backed bond. We think there's huge opportunity there, and there's a massive, massive amount of capital that needs to rotate out of, a carry trade that's over and that's unwinding. And this is a process that's been building up for 100 years since the world wars is, what's de facto backing this printed piece of paper that the US is exporting and these deficits that have compounded on each other for so long, and giving people an escape hatch.
Yeah, I think I'd probably slightly disagree in that I don't think it's the fact that people are bringing in the money that's causing the bubble. I think it's just the fact that the central bank is printing the money. But that's kind of splitting hairs here. It's still ultimately
both are true.
Yeah, it's still a massive imbalance, which is caused by the fact that everybody else in the world has to work for the dollar, but the U.S. government can print it. But I think the crazy thing about what Trump is doing is that essentially he's trying to remove the symptoms of the problem of the money printer while keeping the money printer, and that's I think what's making it so far seems to be on backfiring. In fact, as we speak, there's been a big spike in the 10-year yield. It's up to almost 4.6 now, which is a huge deal. This might be the highest it's been in a very long time. This is I think the important one. The bonds are getting destroyed. So as the bond yield rises, the value of existing bond drops. And that's dangerous because it's that's the cost of the U.S. government borrowing, and the U.S. government has a lot of debt to roll over now. Yeah,
I mean, I couldn't agree more. I think Trump came out with this maximalist tariffs position, and it backfired on him. And now he's pivoting to capital controls, which is effectively trying to achieve the same thing. I mean, what we have to understand is the U.S. has been running this massive trade deficit, meaning the rest of the world is getting a ton of dollars, and they have to do something with the dollars. They don't want to buy their own currency with the dollars. So traditionally it was buy gold because we were living on a gold standard. Then it was buy US treasuries because those were de facto backing. And now it's buy stocks, buy land, buy farmland in the US, buy real estate in the US. And you're seeing these foreign trading partners just scoop up all of the desirable goods in America. And that's caused civil unrest in America. Because now there's like 80-90% of America that can't afford the yacht, can't afford the penthouse, can't afford all the things that these foreigners are bidding up in price because they have such a surplus of dollars that the central bank has printed. And it's really divided the country. Like when you talk about America, you're talking about two Americas now. Which America are you talking about? Are you talking about the Rust Belt America, middle America? Over half the country doesn't have a college education. Or are you talking about Silicon Valley America? Are you talking about Manhattan America? They're two separate Americas at this point. And so Trump has been saying, I'm working for Main Street, not Wall Street. I'm talking about bringing back the manufacturing jobs. I'm talking about bringing back the middle class. And so what he's trying to do is get the foreign capital out of America, which is bullshit. That's a bad deal. You cannot give China $1 trillion of US dollars and offer them nothing to buy with it. It's a raw deal. And so I mean, what I think is happening is, Trump came out with his tariffs, and the one thing he didn't tariff is gold. It's, to me, it's an effective wink, wink, nod, nod. We're going to start a Bitcoin strategic reserve, and we're not going to tariff gold. Everything else, you're not allowed to buy. I'm going to impose a 30% withholding tax on stocks and land and real estate you buy in America, and the 10-year treasury is going to run real rates negative. So you buy the treasury, you lose purchasing power. You buy any of the stuff in this country, I'm going to tax the living hell out of you. But you can buy gold, and I encourage you to buy Bitcoin. And then to see like the Abu Dhabi Sovereign Wealth Fund come out and say, yeah, we just added $500 million to our Bitcoin position. I think we're moving back to neutral reserve currency. I think eventually the Trump administration is going to revalue the gold on the balance sheet of the government, and they're going to put more of a focus on Bitcoin, and the dollar, the dollar will be the world reserve currency, whatever that means. Yes, your pizza will be priced in dollars, but the world reserve asset where sovereigns and central banks and businesses actually store their cash balances, I think will be increasingly gold and Bitcoin, and eventually Bitcoin, in my opinion.
I just find it hard to believe that they've got a hard money instinct. I mean, you listen to Lutnick, you listen to Besant. I mean, they're very big fan, and Trump as well. They're very big fans of the U.S. dollar being the global reserve currency. They want to strengthen it. They want to make sure the whole world uses it. Trump was saying something about sanctions against countries that try and move away from the dollar. And, you look at the budget that is being bandied about now. It's basically Bidenomics, but with added defense spending. It's keeping all of the Green New Deal stuff. It's keeping all of the. It's really business as usual. Nothing has changed. All of the talk about reducing government spending. So if you do move to tie the dollar to gold or Bitcoin, if you do increase the value of gold or Bitcoin. You have two scenarios there. You're either going to undermine the dollar massively because you're going to increase the demand for gold and Bitcoin, or you're going to have to peg the dollar to gold or Bitcoin, at which point no more seigniorage, at which point you need to run a balanced budget in the long run.
Yep.
And that's just doesn't seem very likely to me.
Yeah, I don't think that's happening anytime soon. And to be clear, as an American, this is a bipartisan effort. Like the notion that this is a Republican thing or a Trump thing is garbage. It's just different rhetoric and different gobbledygook that's trying to achieve the same thing, which is, even the reliance on China as a national security threat at this point, at least you can make the claim. Over 78%, I think, is the number of the materials needed to produce weapons. We need China to play ball with us. So we've outsourced the ability to produce anything to such a degree that there has to be a Chi-America divorce, whatever that means to you. And that's bipartisan in the United States. And I think the way that, hearing these politicians, the funniest thing about politicians is they have to get reelected. And so, for example, Treasury Secretary Scott Bessent is having a tough time finding buyers for his garbage 10-year bonds, right? No one wants that heaping pile of crap. And so
they need better influencers, really.
Yeah, exactly. Well, who's been the marginal buyer? Because it's not China, right? They don't want that crap either. It's been, if you look at, it's been Paulo. But so what I found fascinating, Paulo tweeted out a graphic where he's now top 5, purchasers of U.S. debt. And I was like, really, top 5? Who's number 1? Number 1's the Cayman Islands. The Cayman Islands has 75,000 people. How are the Cayman Islands? Oh, that's where all the hedge funds are. And so what you realize is, in an extremely levered U.S. banking system, an extremely levered Wall Street of hedge funds are replacing the buying power of China. The only way they can replace that level of buying power is with leverage. And so when Scott Bessent comes out and says, we're focused on deregulation, deregulation is a fancy way of saying we're going to remove the supplemental leverage ratio and allow banks and hedge funds to use unlimited leverage to buy the 10-year. Now, if I were to say it like that, it doesn't sound very politically palatable, right? Like unlimited leverage for Wall Street is a bad word. That's how you don't get reelected. But if I say this is about deregulation and getting out of the way of innovation, that's why I'm going to remove the rules that force banks to post collateral to buy my garbage bonds. Then all of a sudden it sounds appealing. Another goal for Bessent, he needs to devalue the dollar against the yuan. He needs the Chinese currency to get stronger. He needs the dollar to get weaker. But instead of saying we need a weaker dollar. He says, we've been talking to China about finding a more fair equilibrium. Well, an equilibrium would, if these things are going to be more equal, it means the dollar's got to come down and the yuan's got to come up. But that's a more politically palatable way of saying, I have to devalue the dollar. I don't have a choice. So these politicians, warping their words to make them sound better than they are, to get reelected, I do think inevitably it's a bipartisan effort to reduce, we have to exit this deficit world. It's becoming a national security threat. Now, whether they forfeit the money printer now or in the future, we all know it's inevitably coming, but I see a lot more gradual process towards gold and Bitcoin than I've ever seen of any administration. And they're trying to mask it. Even QE is a bad word now. Even the normal American at the grocery store knows QE means inflation. Inflation is bad. And so, Bessent is finding ways to stimulate dollar liquidity through treasury buybacks instead of using words like QE. So at the end of the day, it's all garbage. They're saying the same thing. They're going to have to do the same thing. They're going to have to increase the money supply. They're going to have to print capital. They're going to have to devalue the dollar. And they're just doing it in clever ways that the person at the grocery store doesn't recognize. But I did find it fascinating. The one thing Trump didn't tariff was gold. And amidst all this reordering of global capital flows, he made a particular point to say, we have a Bitcoin strategic reserve. Now, whether that was purposeful or not, but foreigners and sovereign wealth funds like in Abu Dhabi, they're clearly taking note. They're buying gold, they're buying Bitcoin. They're not buying, I think the NASDAQ and Bitcoin will decouple because sovereign wealth funds are going to stop buying Google at 50 times earnings. Why would they anymore? They're going to get a 30% withholding tax. Trump's told them to leave.
Yeah, I don't think that's going to be very wise. I mean, I just think, listen, the smart way to go about this is free trade, free capital flows, and get rid of the money printer. Now, trying to balance the trade while keeping the money printer is the equivalent of, imagine you have a money printer in your basement and you can just print money and buy things for free, but you're trying to also make sure that you never spend more than you earn.
They're contradictory.
The money printer.
Yeah.
Why would
it's
you
not?
have
It's
a
not
money
a real goal.
Just get rid of the
100%.
money printer. But if you do have the money printer and you want to take advantage of it, then why are you trying to stop trading with people? It's like saying, I don't want you buying stuff with my money printer.
And Bessent has said this, the funniest thing about these people is financial authorities tell you what to expect because they cannot surprise the financial market. The financial market has way too much leverage. Leverage and volatility don't go well. So one of the ways they reduce volatility is by telling you what's going to happen. That's when Jerome Powell comes out at his little meetings and says, I'm going to stop QT and start QE. Do you hear me? And the financial markets start pricing in what he's saying because they can't afford volatility. There's too much leverage in the system. And so what Bessent has said is, my goal is to reduce the deficit. It's not to erase it. And so you just listen to the guy. They're still going to print money. They're still going to have to finance this government through borrowing from whatever highly levered US bank deposits and hedge funds in the Cayman Islands. So I agree with you. It's saying that we're going to balance the budget, but also print money. These are contradictory statements. It don't make any sense. We'll see what happens, but just the notion that they're telling foreign capital to get out of the country, we're okay with you buying gold and Bitcoin, but not anything else. I think there's hopefully, and I'm biased, right? I'm a Bitcoiner, so I'm optimistic here, but I'm hopeful that there's a restoration back to, let's just store our capital in something that is scarce and see where things unfold from here. I think that'll be the winners of this decade is I'm going to sit this one out. I'm not going to own bonds. I'm not going to pay 50 times earnings for a tech company where I don't even understand their products. I'm just going to stack sats and watch this unfold. And those are going to be the biggest winners, both at the sovereign level and the individual level, in my opinion.
Yeah, absolutely. This is what I really think. I mean, it's just, the most difficult thing about this is just believing that it can actually be this simple. It's just very difficult. It's very difficult, particularly in fiat world, because everybody has spent the last 30, 40 years of their lives playing increasingly more complicated and sophisticated games, trying to eke out 1 or 2% over inflation. And now you're just telling them, nope, don't do anything. It's a very, very, very Zen thing where you just sit there and do nothing and watch your orange coins go up. Yeah,
it's a difficult thing. It flies in the face of everything you've learned. So, Bitcoiners talk almost like it's a spiritual experience almost for some people to really educate themselves on the proper way to exist and live and provide. That's the stay humble and stack sats is goes very deep and earn more than you spend. Think about the future, lower your time preference, save. And I think you got me into carnivore and steak and health. I owe that to you. But I don't think it's a mistake that Bitcoiners also then tend to take care of themselves. That's another thing with the US government I thought is fascinating is they're trying to reduce their expenses everywhere, one of which is Trump's now directly attacking the pharmaceutical industry. This is the first administration in America that's saying, you're charging Americans 10 times as much, and I don't care how much you're going to lobby me. I have to fix this because everyone in this country is fat and sick, and it's too expensive for me to take care of everybody here. And so I've never seen our government do that. And it's just, like a restoration back to first principles. Instead of printing money to take care of fat and sick people, how about everyone just not be fat and sick? And Bitcoiners have somehow figured that out first through the journey of low time preference, prioritizing their future, hard money, ethical living. It's interesting time for sure.
It is, absolutely is. I mean, I'm a lot more cynical of the chances of success for these ideas, but it is still very interesting that at least they're making that effort to get out there. They're going after the pharmaceutical companies. They may not have the best kind of execution on these ideas, but it's definitely moving the Overton window of what can and should be done on these things.
Yeah, I just find it validating. Everyone should know I've never voted in my life because I just don't believe in this system. I don't think change is affected by putting the right old white man in a blue suit in a house in Washington, D.C. That's not my belief system. So I vote with my time and energy, and that's working on Bitcoin. That's where I think I can affect the most change. So I don't believe in any politician. I don't think any of them are going to affect more change than open source software and free markets, to be clear. But I find it validating that all of a sudden the US is like, wait, these trade deficits don't make any sense. Wait, subsidizing pharmaceutical companies with profits by overcharging Americans is actually a bad thing because we're enabling everyone to be fat and sick, and that's far more costly than it is. I just find it validating to hear these people say what Bitcoiners have believed for a very long time. So we'll see where things shake out. At the end of the day, their jobs are to get reelected, and people are going to vote in what they want. That's cheap money, and so we'll see what happens. But it's been validating to watch, gold and Bitcoin, harder assets outperform, and watch Trump's tariffs fall flat on their face. I think it's just been funny.
Yeah, I mean, it's just such an improvement of your life experience when you just have Bitcoin, and then you can watch all of this stuff knowing that,
yes,
let them fight among themselves. It's all entertainment. It's all bread and circus as long as you have Bitcoin.
Yes,
it really is the cheat code.
Yeah, I mean, and the time preference is infinite, right? I have a very high confidence in an ability to build for my future because of the sats I have in cold storage, and those that have government bonds right now can't say the same.
Yeah, but that's it's got to happen. This whole funding war and endless government spending business has to come to an end. It's been a massive drag on our civilization for the last couple of centuries, and it's time for it to end. All right, what else do you have in mind? Can you share with us some more plans coming up?
I mean, I got some fun announcements at the Bitcoin conference. So we'll have some lending stuff. We think we can achieve single-digit APR rates, which would be an industry-leading rate for those that want to borrow against their Bitcoin. For some of our customers, a lot of lending announcements on the Strike side. On the 21 side, we intend to provide proof of reserves. We think it's important to try and achieve that for a company of our size. So I'm hopeful that I can get that done over the near-term future. So yeah, the focus for 21 is what everyone should know is we announced an intent to go public, but that transaction hasn't closed. So my job is working with regulators to get us listed on a stock exchange officially under the ticker XXI, and then educating the world, hopefully providing products like proof of reserves for our existing holdings. And then on the Strike side, I've got some lending announcements, so pretty exciting. And stacking sats on both sides of the balance sheets.
Excellent. Keep at it, man. Keep at it. We're cheering for you. We're cheering for you here at the Bitcoin Standard Podcast, Jack. Thank you so much again for joining us, for your time, and best of luck on everything.
Thanks, Saif. I appreciate it.
All right. Take care, my man.
See ya.